Can mutual fund investments in India finally get cheaper? India's market watchdog, SEBI, is shaking things up. It has proposed a major overhaul of how mutual funds charge you. From management fee to brokerage costs, everything is under the scanner. The goal? Simpler and clearer pricing and more value for everyday investors. If these changes go through, you could see lower fees, fewer hidden charges, and better transparency in where your money goes. It's a move that could reshape India's $900 billion mutual fund industry. Of course, fund companies are not happy about this, but for retail investors, this could be a real win. Our next report tells you how.
Can mutual funds get cheaper? That's the question India's market regulator SEBI is trying to answer. SEBI is the Securities and Exchange Board of India. It has proposed sweeping changes, and these changes could make mutual funds simpler, clearer, and maybe even cheaper. Let's explain what this means for you. If you invest in mutual funds, you already pay a small fee. It's called the expense ratio. This is the cost the fund charges you for managing your money. It's automatically deducted from your investment's value. So, most people don't even notice it. But over time, even a small fee can eat into your returns. Now, SEBI wants to tighten the rules. It says these costs need to be clearer and possibly lower. Right now, some fees like brokerage and taxes are bundled inside the expense ratio. That makes it hard to tell how much of your money is going where. SEBI wants a breakup of charges. No more hidden costs, no more surprises, just a clean line-by-line bill for every mutual fund investor. The regulator also wants to cut brokerage fees. That's the fee charged when a mutual fund buys or sells shares for you. Right now, it's around 0.12. SEBI wants to bring it down to just 0.02. That's nearly 6 times cheaper. Think of it like this. If your food delivery app charged you $12 in service fees, SEBI wants it to be just 2 instead. SEBI also wants to cut fees on complex trades like derivatives. Right now, the fee is 0.05. SEBI wants to bring it down to 0.01. But this isn't just about saving money. It's about making the system more transparent. India's mutual fund industry is massive, worth nearly $900 billion. And since the pandemic, more everyday Indians have started investing. They're moving money from gold and property into mutual funds. SEBI wants to make sure those investors are protected and they are getting a fair deal. Some funds may still charge more, but only if they can prove they've delivered better returns in the past. In other words, SEBI wants fund houses to earn their fee and not just charge it. It's also asking fund companies to keep their mutual fund business separate from other financial services they offer. No overlap, no confusion, no conflict of interest. The market reaction? Mixed. Shares of top asset management companies fell sharply this week, because if fees drops, so will their profits. But for investors, this could be a big win. Cheaper, simpler, clearer. That's what SEBI is pushing for. The regulator has asked for public feedback by November the 17th. And if the plan goes through, mutual fund investors can get more value for their money.
Want the facts?
The latest developments?
News that gets straight to the point.
Well, we've got all 3 just for you. This is Firstpost Live, a brand new show, your window into what really matters.
Don't miss it.